Hey friends, Kevin here, your Sacramento Stockton area Realtor and lender here with this week's weekly real estate report. Well, if you missed last week's report on this crazy new loan level pricing adjustment, which is to say the fee for rates, you really got to check that out because it is actually almost unbelievable. Good news is there's a little pushback happening. Maybe this will get reversed, but if you missed it, let me just show you this real quick. And this is what it's going to be like. These are the fees for a specific rate. And this person right here with a 720 to 739 credit score, putting somewhere between right about 25 to 20% down, will be charged 1.25% of the loan amount in fees. Now let's contrast that to way over here, somebody with a credit score between 680 and 699 who is putting less than 5% down would actually get a better deal. Yes, that is actually what I said. So if you're thinking, wait, that doesn't make sense, it doesn't. And that's the whole point. All right. Other news right now, the Fed came out and said, hey, let's raise interest rates one more time. So Fed fund rate went between their target rates 5 to 5.25. What that means for you and a lot of people, especially we're talking about HELOCs and other credit, right now, the prime rate is 8.25%. So if you have a home equity line of credit that's tied to prime rate, your home equity line of credit just went up by another 0.25%. And that's they've come up a long way recently, which kind of has me concerned that we could start to see somewhat of a bit of a crisis as all these equity line of credits, their payments are going up. Now, a very close friend of mine, David, is doing some research right now in our area on foreclosures, and he is noticing that there are a lot of foreclosures starting to come on the market, and they all seem to have one thing in common, and this might shock you, but they all seem to center around very low down payment type loans, your FHA with 3.5% or even conventional with 5 or less percent down. Once you start missing a few payments on these loans, the fees and penalties go up rapidly. You already had very, very little equity when you bought the house. And when you add in these fees and penalties, you have no equity, you have no way to sell the house. And so that starts a foreclosure process. And if you've been around long enough in life, you know that once people start to foreclose homes and enough of them happen, then values start to fall. When values start to fall, more people fall into that category and it kind of snowballs. But I didn't come here to depress you today, so I'm sorry about that. So let's take a look at the chart and see what's happening this week in real estate other than what I just said. So I'm really still hoping for some better news here with homes coming on the market. So our available homes went up by just a little bit, but hey, you know what? We'll take it. It is still going up. For some strange reason, we have seen our pending sales drop just a little bit this week. Almost, we'll call it stagnant. We'll kind of take that. I'm more interested in seeing more homes come on the market. So as far as pricing goes, the median list price right here, median list price is holding steady, and it has for just about 4 weeks now, really kind of been holding there around the 500 and I'm sorry, not the, let me get that number right. Not the median selling price, but the median list price has been holding right around 660 thereabouts. So 660,000 is our median list price, while the median selling price is still remaining somewhere around 550,000. So, like I said last week, you can look at this as bad news. You can look at it as good news. Good news is list price has not gone up. And the good news is that the median sales price has not gone up for those of you who are looking to buy. So, and if you're a seller, hey, good news, because the median list price hasn't gone down and the median sales price really hasn't gone down. So no matter how you look at it, I don't know, we got some good news, just like I said last week. So, all right. So I said that the Fed just raised rates by 0.25%, but the good news is Mortgage rates remained just about steady once again. Last week they were 6.43%. This week we're at 6.39%. So a little tiny bit down, which I think everybody can agree is a good thing, no matter who you are. Lower interest rates are good. I'm sure I can think of somebody who would disagree with that, but we're going to take that as a win. So anyway, thanks for joining me today, and I hope to see you next week. Take care. Bye.